Hello everyone, I'm Mark Sane and welcome to Sane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 25 of the Forex market review. Today we're going to take a look at the euro pound as well as the gold, just to see what's happening with those two currencies and indices, and what effect maybe the Brexit is having on the gold or maybe on the euro and the pound. Let's go ahead to the charts. So first we're going to take a look at the euro pound. So up on the left hand side we're starting on the weekly time frame today, just to see what's happening and where the market's going. So the first thing we want to do is grab our tool, look left, and just to see where it's bounced a few times. So obviously if we draw a line somewhere around there, we can see it's bounced a few times and it's hit there before it did its retracement. And then we can probably drop another line roughly somewhere down these levels here is roughly where we think it could pull back to if it was to come back and find some support again. Now that's on a weekly time frame. Our DSR indicator, which are these lines here, are set up on the daily time frame, so they look a bit obscured on the left hand side here, but once we drop down to the daily time frame we'll see them correctly. Otherwise you can always just modify them by going into the indicator itself and changing the time frame to show it for this specific time frame. But I'm really just want to look at the higher time frame. Looking left, we can see we've got move up, back down and push back higher. So going off our wave cycles, we have a wave 1 starting at the bottom here, then we have that push higher to where wave 1 would have ended and wave 2 started. We then have the pullback of wave 2, and then once the pullback of wave 2 ended, it's wave 3 starts. And when we're looking for that pullback of wave 2, at least 61.8 Fibonacci retracement, that's definitely done that. It's probably done way more than that, but it just can't break the lows of the 1, which it didn't. Found support again and pushed back higher. Then it found resistance at this weekly time frame. So if you're looking to get out, if you had to put that in early in the piece, which you could easily have done, you would have probably got maxed out on your profits. So would have been a good move to get out roughly around those levels up there. So 3's pushed higher, pull back for wave 4. Again, wave 4 in this case, we generally want a minimum of 50%. Well, that's what I like for my trading rules, and that's pretty much almost come there. But you also want to look left for support and resistance areas. So we're possibly looking at pushing higher for wave 5. So we just want to look on the lower time frame just to see where it might be. And what we'll do, we'll drop down to the daily chart so we can see that 1, 2, 3 pull back for 4. We have the ABC cycle, A, B, C, and what we want to know is A equals C. So this movement was about 3,800, which is about a 380 pips, and this is about 380 pips. So it's done a good A equals C movement. Now we're pushed back higher, broken those highs, coming back to retest this support area. So to me this looks like it possibly could be a wave 5 higher. And on this daily chart we could be 1 back for 2. So again, if that's what we want, we'll just delete those other indicators. We grab our Fibonacci retracement tool. Remember, we want to see a minimum pullback of at least 61.8, which is done. Look left, we can see some resistance or support levels here, so it's hitting that. But we don't just generally buy off those support levels. I mean, you can if your trading rule says you want to see a minimum of 61.8, you want to put the stops below there, a couple hundred pips, maybe bring it a break even if it gets to there, look at getting out before the highs. You know, you could risk 1 to make almost double, and that's a good risk to reward. But sometimes you just want to play a little bit more, and for me, I like to see it pull back, finding this support area. It's also hitting this 200 EMA on the daily chart, which is a good thing, and I can now see the stochastic in the oversold area. So now I'd probably be looking at getting in there. Again, you could want to jump in and put the stop losses below, maybe risking around 100 pips at least, getting out there before these highs. So risking 1 to make 3 times your money. Don't try to get too greedy. You just got to always make more when you win than what you lose. But yeah, that could be an option, or you could look for other indicators to occur. I like to drop down lower time frames, so nothing really on the 4 hour. Look on the 1 hour and look for some divergence. So we've got 1, 2, 3 until it comes back to zero line. We can't really know that 3's ended, so it could have a pushback high and make another newer low. So really, if it doesn't break these lows, that's still 1, 2, pull back for 2, and ready for 3. So I'll just drop those in for you again. Looks like possibly 1. This is all the way up, and then we're starting 2, the pullback for 2, and now we're looking for a pushback higher for 3. So yeah, just look for other things that add up, and the more that meets your criteria, the better. So if it's hitting support, hitting the 200 EMA, hitting a fib level, you're seeing divergence on the lower time frame, stochastics come down, more items are ticking in your favor, and then that's got to give you a better success rate. And then you can look at for a move higher, and generally you like to see a break in trend. So you're seeing it stepping down, you really want to see the breakout, retest, then look at getting in, and then for its pushback higher. If it doesn't break this down movement, then it's still in a downtrend, and you don't want to be jumping on board so early in the piece. So that's the euro. Pound, obviously it's weak, strengthening and now weakening, all part of the Brexit. So really you want to wait till that vote finishes, and when that vote finishes, then you could determine which way the market's going to react, and then make a trading decision based on that. So if just jump across to the gold chart, what I want to say again, with the Brexit, they vote in London Thursday the 23rd of June. So London time, about 7 a.m. in the morning to 10 p.m. at night is when the polls are open. That's roughly about 4 p.m. Eastern States time, Australian Eastern States time, 4 p.m. on Thursday the 23rd, closing about 7 a.m. Friday morning Australian Eastern States time. So until 7 a.m. Friday morning, when the polls have closed and they've finally got the last numbers, obviously there may be some movement hours before that, especially if the votes pushed favourably one side and there's no way they can catch up with the votes, then the market's going to be moving. But you really want to wait for that market to move and then have a plan of attack, because you're just going to be gambling and guessing a strategy. And sometimes a technical setup is best weighted to a large economical announcement has occurred. So I just want to put that on board out there for everyone. Now looking at the gold on the weekly time frame, what we had was this big move down lower, a big large AO, which was 3, push back higher, and then the push back lower, which is showing now divergence, and then it's a step lower. But you really would want to have this trending line broken, so you can go on ahead and drew this line in roughly something like that, and it's just stepping down. It's now broken out and it's come back and it's finding some support area. So what I'm thinking is, at this stage we had our divergence, it's now pushed back higher, but this AO is nowhere as big as this AO there. So therefore this is unlikely to be a wave 3 pushback higher on the weekly time frame. So this is possibly a 1 coming back for 2. So if it's going to come back for 2, we're going to see it come back all the way down to these levels down here. We want to look left, and we're going to find some support around those levels down here. We can see it bounced a few times. So that's roughly where it possibly will find support when it does pull back. And then you can look for a weekly pushback higher. So at this stage, it was looking like it could be ending. Drop down to the daily chart. We see this large AO. We have a pullback and a pushback higher. This one never gave us an entry to long it. So if we come back to the beginning, that's roughly where wave 3 started. So we had A, B, C, 1, 2, 3, 4, 5. So for my type of trading, I like to see it pull back to roughly the 50% mark. I would have liked to see it hit this support area around here. It just missed it, didn't give any entry for me, so it pushed back high and missed the target. But it then showed divergence with a higher high in price and a lower AO. So really, if you're looking at shorting the market and you got in roughly around here and you put stop loss up there, you could have risked 400 pips, made 600, so risking 1 to make 1.5 times, getting out of these lows again, you could have made some money. That's all this move down is when it's likely that the Brexit pound was going to vote to get out of the euro. So we're not talking the euro, the currency, because England have its own British pound. We're talking the European Union. So that's when they were looking at getting out. Now the polls are saying these last few days, here it's looking like they wanted, sorry, not this one, here's looking like they wanted to get out. So that obviously with the getting out, that's the risk currencies, or in this case gold. Everyone jumps to gold when there's higher risk, so that pushed higher. But the last few days it's been pulling back because they've been saying that it's likely that they will be a stay vote. So that's why it's pushing back lower these last few days. So therefore people are jumping out of the gold. So, and we don't really know which way it's going to go, but to me it looks like either way it's going to be short-lived and it's going to have a big pullback lower. So I'm really waiting again for that announcement to see what's going to happen. Looking at a lower time frame, we see a large AO and it's pulled back. It's doing its ABC cycle. This had a pullback of about 390, almost 400 pips. This has done about 360, almost 400 pips. It looks like it could find support here and bounce off this 200 EMA along with horizontal support. So based on a technical trade, we possibly could have a wave 1 here, then it pushes up to there, then we have the end of wave 1, which is the start of wave 2 for the pullback lower. We then have the pushback higher for wave 3, and we then have the end of wave 3 with a pullback lower for wave 4. Again, we'll just grab the Fibonacci retracement tool, roughly the start to the end. We want to see it pull back to round about the 50% mark. Like I said, see, 50% Fibonacci retracement matches up with a horizontal support line, and it's doing its ABC, and that's roughly where the A equals C pattern will end. So based on the technical pattern, the wave cycle patterns, Fibonacci hitting at 200 EMA, the stochastic becoming oversold again, technically everything's pointing for a pushback higher. And yeah, so if you wanted to, yeah, you could look at taking a gamble and getting in there, putting stops roughly down there, trying to, you know, risk 200 pips to make 400 pips. But you're really just gambling, because this announcement in the next 24 hours, or a bit over 24 hours, 36 hours, it could go either way. And it's just best to be out of the market and not get affected by the way things go. But if you just want to trade the trade based on technical setup, then yeah, it looks like it's setting up for a good move, push back higher. On a 1 hour chart, do we have divergence? We do. We have a lower low in price, and we have a higher AO. So that's another thing you can add on your checklist of meeting the criteria. And if 15 minutes, the same thing is occurring. So pretty much if you're looking at this trade, yeah, just go through your trading pattern, write down your criteria of why you want to get in and get out, and see where it matches up. Thank you for that. That was week 25 of the Forex market review. We wish you all the best in your success. Take care. Bye-bye.